I focus on people because that's everything, right? Money and deal is, I think, two important things to be successful as a syndicator. Everything else is a noise, right? Everything else is something that you can outsource eventually. But a money and deal, you kind of have to have it, right? And where those money and deal come from, it's networking with brokers, networking with investors.
This is episode number 08 of the Multifamily Success Stories podcast. Would you like to turn vacant units into cash and earn up to 3 times more per door without having to do any extra work yourself? We offer fully managed short-term rental solutions for multifamily investors. Go to managedbylux.com for more information.
Hey, this is John Bell
And Julian Sage.
and welcome to the Multifamily Success Stories podcast. This is a show where we talk to multifamily investors about their journeys and starting and growing their real estate empires.
Our goal is that you'll be able to walk away not only inspired, but with practical information to help you in your real estate journey.
Since we are a new show, please go over to iTunes and leave us a review and let us know what you enjoy.
And if you haven't done so already, go on over to our Facebook group, the Multifamily Success Network, to connect with the community. Hey, what is going on, Dealmakers? Julian Sage here, and in this episode, I have the special honor of speaking with Yoshi Asano. Yoshi has been investing in commercial real estate over the past 15 years and is the founder and managing director of Lifestyle Capital. Lifestyle Capital has over 700 units and more than $60 million of assets under management. Yoshi's been involved in more than $120 million worth of multifamily investments as he's able to help US and Japanese investors acquire multifamily properties. In this episode, Yoshi shares his story of coming to America from Japan, the successes and failures along the way towards acquiring his first multifamily property, how he's been able to leverage the power of networking to grow his business to where it is today, and how he's also positioning his business and playing into his strengths, such as being Japanese, being able to work with foreign investors. If you'd like my show notes for this episode, go to multifsuccess.com/EP08. Or if you'd like my show notes sent directly to your inbox every week, then go to multifsuccess.com/show notes. With all that being said, on to this week's conversation. Hey, welcome back to Multifamily Success Stories. My name is Julian Sage, and in this episode, I have the special honor of speaking with Yoshi Asano. Yoshi, would you please introduce to yourself to the Dealmaker community and let them know who you are and what inspired you to get into multifamily investing?
First of all, thank you for having me on your show. I'm very excited to be on the show. Appreciate it. My name is Yoshi Asano, and I have been doing the multifamily investment since 2015, actually. Syndicate the deal, buying the deals. And also, I'm a broker helping Japanese investors buying deals in Texas. By the way, I live in Dallas, Dallas, Texas. So I help those Japanese investors buying deals here.
Can you give us a little bit of backstory? So you got started in multifamily investing in 2015, but how long was that the first thing that you started doing was multifamily, or when did this actually start your real estate career?
Yeah, so I used to live in California, right? I used to work for Japanese building equipment manufacturers, and my clients are the builders, developers, investors. So I realized that I'm in the other side of the table. So I have to move. I have to make a move to the other side of the table. So I started investing into like single families, land, stuff like that in California. But it was so tough in California, as you know, probably. California is tough markets for real estate investment, especially for yield play or cash flow deals. It's more like a capital gain. Kind of speculation type of play in California, because a lot of foreign company comes into California and inflate the price, right? So I look for a place to invest for cash flow, and I found that the Texas is a great market. So I moved to Texas. That was 2012 or something like that, and I started small. Right? I started small with fourplex back in 2012. That was just own capital. Just doing a deal myself, but I quickly realized that it's hard to scale, right? So I decided to do the syndication. I educate myself, and I started looking for deals maybe in 2014. I found the first one in 2015 as a syndication deal, and it was like 89 units. here in Fort Worth. So that's how I started syndication with the larger multifamily buildings. And since then, I'm just focusing on multifamily to this
So
point.
so you make it sound very easy. Can you bring us back to that first experience? So what was the reason why you came to California? Because you're from
Oh,
originally
so
Japan.
yeah, I born and raised in Japan, right? And I just want to I just want to experience different things. So I just decided to go outside of Japan, and my option was Australia, Canada, and U.S. And actually, I had a friend in California. I have a few friends in California, so I decided to go to California. So that's kind of how I made a move. I was 19 years old. I went to college there, and my plan is to become an entrepreneur. I want to do some sort of business. Maybe trading business was hard back in the day, like 20, 30 years ago. So I wanted to do that, and I got a job as a kind of like this company was doing building. It was a building. Equipment manufacturer, but also have a division that doing the online trading, online like product trading. It's not the trade, but it's just a trading like import export type of business. So I was doing that, and then when the other company start, actually this was the one of the it's a number one boiler manufacturer in Japan. Started business in US, and I was headhunted from that company. So I moved to the other company and I started to talking to all these builders and developers and investors. So that's like why I moved to US, and then that's how I started my career.
So you actually came to the U.S. because you wanted to get into entrepreneurship. You wanted to try something different. But originally it was because you were thinking, I want to get into like stocks. You said like trading,
Not to start with import export, trading
import export.
companies. Yeah, they call it trading company back in the day. Yeah. So import and export, more like traditional business, right? Buy products and sell products to somewhere else. But I kind of got sick of it. Distribution business is it's tough, right? Especially you're gonna be in the middle. Then all these middlemen is gonna be wiped out, right? Because it's gonna be direct to the consumers now. So
And when and so you were doing import exports, but you were dealing with a lot of developers. You said a lot of people that were in real estate.
yeah, so import and export, and it was more like specializing building equipment, HVAC equipment, boilers, heating, water heaters, stuff like that, right? Kitchen and cabinets and stuff like that. So my clients were builders, developers, investors, people like that. So I've been talking to those guys, hotel owners, people like that, and I found out that they are making a lot more money than I do. So I figure I'm in the wrong side of the table. I have to make a move to the other side of the table. That's kind of how I get into the real estate. But the first thing I did, first maybe like uh, first time I opened up my eye to the real estate is the book called Rich Dad Poor Dad, written by Robert Kiyosaki. I read the book when the book came out first time, right? I read the book, and I really wanted to get into the real estate, and I noticed that all my clients are already there. So that's kind of like how I figured out, how I found out and try to transform to the real estate investment.
So did you leverage that relationship or that business that you saw, because you said you were dealing with a lot of people that were already in real estate or investors? Did you utilize that relationship, or did you say, well, I see what they're doing, so I'm just going to try to do something on my own?
Yeah, so my not investors, but my clients are big, right? They're like, top 10 builders nationwide. one of the largest developers, like brand name, hotel chains like Hilton's, Marriott, guys like that. So I couldn't kind of follow them exactly. But one time, but the conceptually, I wanted to get into the investment side, right? And one time I had a sales call. I was in California and I had a sales call. It was small multifamily buildings in Redondo Beach or somewhere in the beach. And it was like 15 units or 20 units, small building, right? I showed up with my equipment, and then the investor came up, and the investor was wearing like shorts, flip flop, but like aloha shirts. It's very casual, right? I was like, and then in the business world, it's usually like leather shoes, slacks, dress shirts and stuff like that. So I was like, what's this guy doing? I'm very curious about it, and I found out he used to be a LAPD. He used to be a policeman, and how he get into the real estate is he bought like fourplex in the ghetto. He knew the tenants, he knew the demographics, but being a policeman, he knew how to handle those people. So he knew type of the tenants he had, but he bought the deal. He managed well, and he sold it at the pretty good profit. And since then, he never looked back, and he just got into the real estate. And now he was doing like resort developments in Caribbean islands. So that's kind of like a you know aha moment to me. I can start small, and I can probably buy fourplex myself, and I can get into the real estate investments. So that's the moments that like dream becomes the reality, right? So that's how I get into how I decided to get into the real estate.
And so you decided to move to Texas after that?
Yeah, so I try to look for deals in California first, and then I couldn't find any deals that make sense because I was looking for long-term hold. Um, so I start looking into different states like Arizona because it's closer from California. But the prices were actually high. I mean, a lot less than California, but still high, right? So I started to research different markets like Colorado, all these cities in Texas, Atlanta, Georgia, Central Florida, place like that, and Texas seems to be is very attractive to me. So I decided to move to Texas.
So you were planning on purchasing a smaller multifamily property. Did you have the capital to just purchase it outright, or what was your position kind of in life?
Yeah, so I did a little bit of single families and stuff like that, like flippings and land bankings, things, and like a little bit of wholesaling too. So I did a little bit of a single family investments just to try to build the capital to invest, and also I was working for a company, W-2 job, and I had a pretty good, not pretty good, but I had some money in the 401k also in account. So I cashed out and I cashed out 401k and bought the fourplex. That was
Did
how
you?
yeah.
So you're trying to find properties in California. Everything was outside of your price range, what you're looking for. So you start looking throughout the US, Arizona, Colorado, Texas. At this point, did you have any real experience in purchasing property, or, because you came from Japan, you're working in California, and then you get inspired, but did you have everything that you needed?
No, I didn't have experience doing buy and hold as a landlord, but I had experience doing the, flipping houses and stuff like that. So single family experience. So I had a little bit, not a whole lot, but that was a good learning experience. Actually owning the fourplex, because fourplex or 100 units apartments, it's I mean, it's the same thing basically. I mean, there's a lot of differences between them, but at the end of the day, you find the tenants, put the tenants in, and collect the rents, right? So it's the same principle. So it helped a lot for me.
So you bought that fourplex, and did you decide at that point that you're going to move to Texas, or were you already there?
I was there. I moved to Texas. Well, I was looking for deals, making an offers for a small deals like that, right? Duplex, triplex, fourplexes. Because residential was better for me because back then the financial option for me was much better in the residential area. I was making offers, but it was tough to find the deals because I wasn't there. I can't tour the deal. Try to do the Google Map and all that stuff, but it was hard, right? So I wanted to move to Texas. I moved to Texas, and then like a couple weeks later, I moved to Texas. I got to my fourplex.
And at this point, did you have like a green card or were you on a work visa? What was your status at that time?
Oh yeah, I had a green card already. Well,
You had a green.
I had a citizenship already.
Oh, okay.
Yeah, so I got a green card when I was working in California, and when I get married with my wife, I became a citizen. So I had a citizenship. But
And so you had your first fourplex, and you're working that. What was that experience like for you for your first larger deal?
fullplex, you mean?
Yeah.
It was interesting. I did everything actually by myself. Well, I hired property management company, but I did a lot of stuff by myself because I couldn't rely on property management company to do what I wanted to do. So I did the make readies, I did the marketings. I did a lot of stuff. So all these experience helped moving forward because I know exactly what's involved and when it comes to the managing the property management, the experience actually very help experience help to become a manager of the management company.
So you're working on this first deal. What was the next step in your progress? Did you say I'm going to purchase something really big, or did you keep around that smaller
Yeah,
size?
my original plan is to keep buying small deals, right? Like duplex, fourplexes. But I found out, it's hard to scale because your capital is limited, right? So eventually, if you take like 50 years, whatever, you get there. But the speed is too slow to get there, right? So I wanted to grow faster. So in order to scale, I wanted to buy a bigger deal, but I couldn't buy it myself, and found out there's a syndication structure that I can actually buy the deals with other investors. So I decided to not to buy any more smaller buildings, and I quickly find out that the smaller buildings are harder to manage because there's no economy in scale. So, for instance, if you lose one tenant, you lose 25% of the occupancy for fourplex. If you have 100 units, if you lose one tenant, it's 1%. So you still have 99% occupancy, right? So that you can say everything to everything. So let's say, for instance, if you have an AC units go out and you spend $3,000, you burn off like 6 months of the rents for smaller properties. But the 100 units property, if you have like a $3,000 AC equipment repair or replacements, that's typical expense, monthly expense that already calculated in. So you don't have any impacts in the P&L. So I realized that bigger deal is easier. So I studied through like educational programs, reading the books, listen to the podcasts like yours, listen to or watching the YouTube stuff like that. I educate myself before I jump in and then start doing a syndication.
Now, was it just like, okay, now I'm going to do syndication. I've listened to the podcasts. I've watched the YouTube. Now I'm ready. Like what was the first obstacle that you faced when you decided like, okay, I'm tired of putting in all this work on these smaller properties when I could just do bigger property, what that economies of scale. What was the first obstacle that you faced when you decided to transition?
Well, mentally, I was buying like, $500,000 deal, whatever, right? Now I'm looking at the $5 million deal. like 10x, right? So it was like, oh my gosh, how do I prepare those money, and how do I get into those deal, right? But it's just a mental, it's just numbers, right? So you just have to overcome that. And second obstacle I had was the experience and requirements. So lender requires net worth and the liquidity to get into the deal, right? For the multifamily, um, they require net worth equal to the loan amounts, and they require pretty good liquidity getting to the deal. And I didn't have that. So, but if I don't have it, I can just find somebody else that have it and partner up with those guys, right? Those are partners. Then now I have it as a team and get into the deal. So that's how I kind of make resolve the issues that I have. Real estate investment is a teamwork, right? So you just team up with the person who has something that you don't have, and partner up and do deals. So I quickly realized 0% of 100%, or getting 50% of the 100%. I'll take 50% all day long, right? So partnering up is very, very, I think, the key for success in real estate, like especially like large, like commercial real estate investment.
So you had some experience dealing with, single family flips. You're doing fourplexes. Now you're ready to scale up and do, much larger multifamilies. Who were these people that you could partner with? Like, how did you find them, and how could you, get them to work with you on these deals?
Yeah. So those are through networking events. Nowadays, not much networking events going on after pandemic, but before that, I'm very active going to all these networking events. You can find it. You just Google it and you can find it anywhere. So there was I forgot the name of the conference, but there's like a National Real Estate Investment Summit or something like that, and it happens to be in Dallas. So I was there, and I met a couple guys that wanted to get into multifamily. They are a lot more. They have a lot higher net worth and liquidity than I had, and they have pretty good experience in the multifamily space too. So, but they are not in the Dallas, Texas. They one guy from New York and one guy from Hawaii actually. So the three of us kind of partner up, and I'll be the boots on the ground, deal flow guys looking for deals, actually put together the deals, and other guys are more like equity partners and advisory kind of, because they are older than me and they have experience in different aspect of the business and stuff like that. So we worked, three of us worked very well, and then we got the first year.
So you go to a networking event, and at these networking events, there's probably a lot of people that are, trying to find partners. How did you find, these people that had the money but were looking for someone like you? Like, how do you find that fit?
I don't know. I mean, it's just it's kind of like dating the girl, same thing, right? It's a feeling, right? I mean, when I choose the business partners, up to still today, I of course look for the talents and skill sets that they have. But now, not only that, has to be aligned with the vision. The vision needs to be aligned, and also, just fun hanging out, right? Just the guys that I could be the friends, become a friend, right? Type of the guys. I choose those guys. Be on board. And these two guys, actually, they are Japanese guys too. So we speak in Japanese. That was a little bit easier for both of us to have a communications. And then there's a lot of common sense, Besides real estate investment, it's just we have fun, just having dinners, a couple of drinks, and we just decided to go, together.
So you found some commonality, some way to be able to connect with these people, and now you have these people that say, "Hey, we want to work with you." So the next step is finding that deal.
yeah, next step was to finding the deals. Well, we talked about how we're gonna structure a company and what kind of partnership we're gonna have. What's the role of each person's, and then start looking for deals. Start looking for deals and start underwriting the deals. And took us a long time actually. It took us like maybe 10 months to find the first deal because we met in 2014 and decided to do the syndication. And the first deal was in 2015.
So it took you around 10 months. And what was happening during that 10 months? Were you just...
I'm looking for deals, the main thing. Looking for equity too, but mainly looking for deal because it wasn't a big deal. Like it's 89 units, but back then the price is still a lot more affordable than today in Fort Worth or Dallas markets. So it was like a $4 million deal. So the equity raise is only like 1.5 or something like that. So it wasn't much. So we are more focusing on finding the deals, making an offers. But yeah, we didn't want to be too aggressive because it's the first deal. We want to be conservative, or we are kind of looking for like a home run deal, right? Can't go wrong type of deals. So that's why it took a little bit longer, I guess.
Do you think that having Japanese partners, myself, I'm half Japanese as well, and Japanese, they can be they can be very cautious, or they can be, they want everything really organized and nice. Did you feel that it was challenging working with other partners? Maybe if your mindset is just like, I want to run and I want to go take action, and now you have partners that are like, well, we want to take our time, or we like to go slower. Did you have any conflict?
No, but back then we didn't have any conflicts because it was the first deal for all of us. One guy actually had a multifamily in Japan, but he sold it and moved to Hawaii, right? He already retired from the investments, whatever, and he wanted to get into the multifamily here in States, mainland, right? And the Texas was the markets that he wanted to get in. So interest, we have a same interest, get into the multifamily investment in Texas, and then we didn't want to fail, right? Because especially the first deal, we wanted to be very successful the first deal because very important. If we failed for the first deal, then we probably never gonna go back to the multifamily investment. So we had the same kind of interest and same level of risk tolerance, I guess.
And what was that first 89 unit deal like? Was everything very smooth, or did you run into any obstacles with that property?
Well, luckily, it was a very good deal. So we got into the deal. It was an assumption deal. We got I think we got a little bit of supplemental, I believe. Yeah, we got a little bit supplemental, but the market was good and we were able to manage pretty well. So in 2 years, we were able to refi and do a cash out refi, right? It's 100% cash out refi. So in 2 years, we get all the capital back, but we were able to get interest only finance with the lower interest than original finance that we had. So cash flow was stay the same, right? So it was at that point it was infinite returns. We didn't have any money in the deal, but we still have the same level of cash flow going. And then we kept it for another 2 years, and we sold it, and we almost doubled the asset value when we sell it. So it was a very, very good deal.
And so you, during that time, that 2 year period, that was the only property that you were working on, or were you during that time looking for more?
Yeah, we were looking for more. But we couldn't get into any deals. Well, I think we are so too conservative, and the market was changing, but we couldn't adjust ourselves to the markets, right? You probably know that the Texas market last 5 years was like a golden age, a golden age of multifamily investments. So we had to adjust, and then I started, and then they're okay me to work with other partners because that's my investment. And let's do project based and start to partner up with other GPs, right? And I started to buy multifamily. My underwrite was a lot more aggressive than in the past with the other partners, but actually it wasn't aggressive. It was the market price, right? That was the markets, and start buying deals with other partners.
And
These deals are we're still holding all these deals. We haven't exit all these deals, but they're doing very well.
so you found other partners that were doing other deals. What was the reason why you decided to co-GP with other people?
So to start it off, we didn't have any issues with the investment style or how we underwrite, but they were stuck with the stuck with the 5 years ago numbers, right? And the markets are changing. And I said, hey, I need to underwrite a little bit more aggressive. Otherwise, we're never going to get any deals, right? Markets changing. But we can take a different strategy to have better ways to increase the revenue. So number still works out, and number still makes sense, and the deals are still good. But some of the partner didn't agree, but they agreed. Something that they agreed is that that's your investment. You can partner up with somebody else if you want to be aggressively pursue the deals. So I found the partners who is at the same what you call it. That's same aggressiveness, or who actually those partners are actually live in Texas also, so they understands the markets, and we started making offers, and we were able to secure a couple of deals with these guys.
And at this point, were you using your own capital, or were you still taking these deals that you were co-GPing on and using your other investor partners from the previous deal?
Yeah, so those are all syndication structure. So we have a lot of investors. We call it LP, limited partners. So each deal we have like 60 to 80 LPs. A lot of investors comes in, and the capital raise is somewhere between $5 to $10 million range. So it's quite a bit, right? Because the deal size is getting bigger and bigger. We're getting like $20 million deals, $30 million deal. It's a bigger deal. So we still have a lot of LPs, but my philosophy is I always invest my own capital too. So I always have a skin in the game, and I also so that way, I have a proud of ownership of the deal, and also I invest myself into the deal as well. So I want to be of course I want to be successful, right? And that way I can align the interest with other investors. So I always invest my own capital into the deal.
So that first deal that you did, the 89 unit, was that just between you and the two other partners, or were you raising
We actually raised a little bit. We don't have a whole lot of LPs. We have less than 10 people in the deal, but it's more like a friends and family type of. That's how a lot of people start, right? As a syndication, you don't have much database of investors to start, so you go you go to friends and you go to family, try to raise a little bit money, do the deal, right? That's type deal. So 89 deal was like that, and but I start to have more networking, start to attend more networking event, try to increase my database of the investors. So now I have a pretty good amount of investors in my list. So I can raise a lot more money than before.
So that first 89, you said you kept it friends and family, and then when you decided to start co-GPing with this other person, at this point now because you still were going and attending networking events, you were collecting people's information that were looking for deals.
Yeah, I was very, very active. Like I've been attending all these, small or big, all these events. When it said multifamily, I go, right? Multifamily something, I go. Uh, so I was very active. So I was at the networking events almost every week somewhere. So I had a pretty good database already accumulated when we had to deal with other co-GPs.
Now, was it it's just as easy? So when you started doing the bigger deals and you had to start finding more limited partners, you've moved away from family and friends. How was it raising money from other people?
Um, it was a quite experience to start, right? Because they have so many different questions, so many different prospect. But I had experience already. I had a successful deal, like 89 units, and it was a syndication structure. So I had somewhat experience. So that helped, right? I was able to speak intelligently as a experienced owner, and that was my first deal. Um, and at that point, I was doing the brokerage business too. So I've done more deals with Japanese investors. It was bigger deals, like 10, $20 million deals. And I was helping asset management for those deals. So I had the experience in not only one deals, but multiple deals. Um, those experience helped a lot. Um, and yeah, so I was able to, make it happen. Um,
So from that 89 unit deal to the point where you were having to raise a lot more capital through those limited partners, you got your brokerage license. You were able to start doing the transaction side uh, of other people's deals, or what
yeah,
was that?
that was kind of accident that I was doing because I wasn't gonna be a broker or agent, whatever, brokerage business, you know. But I had a spare time. Then I thought like, hey, just get the license more hard. It might help my investments. So I just got the license, but at the same time, one of the real estate consultation firm from Tokyo decided to open up the office in Dallas. So these guys approached me. Hey, we're gonna open up the office, and we have a bunch of Japanese investors in Japan. So the, and they're looking for you know any guy license holder to join their team, right? So I joined the team. Uh, it was like almost like accident, and then start helping those people, and since I had the experience, owning 89 units multifamily, none of the other agent had that kind of experience. So all these commercial deals are sent it to me. All these residential deals goes to other guys, but all these commercial deals came to me. So I was able to help those guys.
Wow. So you got your license because during this time you thought, why not just get my license? And at the same time, there was in Tokyo, they set up a real estate firm in Texas, you said?
Yeah.
And so you said, okay, well that's perfect. I'm Japanese. I'm going to go there. And then what ended up happening was you tapped into a network of Japanese real estate investors that were looking for commercial real estate.
So those Japanese real estate consultation firm has been doing the business for 15, 20 years, long enough to have a good reputations and a good network of Japanese investors in Japan. And their focus was Asian countries. They had an office in Singapore. They have the office. They still have. They have office in Malaysia, place like that. And it was a big movement. Invest real estate into those South Asian countries because it's developing, and it was like a high risk, not high risk. I shouldn't say high risk, but high return investment opportunity there. Um, but that they decided to come to US, and it was very coincident, right?
So
Yeah,
you
so,
said,
so I was able to tap into their already built network of
so
investors.
you said that this was a consultation firm in Tokyo consultation
Yeah,
firm?
it's a consultation firm. It's like a full service investment consultation firm that they are doing the brokerage, but they are also, giving them advice of the investments, underwriting, also the asset management, whole service.
So this is a company that basically helps people from other countries, Japan, for example, or Singapore, these different places, be able to do real estate business in America.
Yeah, so it's their focus is to work with investors living in Japan, right? But who wants to invest into real estate outside of Japan, like South Asia, Southeast Asia, or US. But it's gonna be very difficult for them to invest by themselves. First, language barrier is very it's it's it, it's difficult, right? And then they don't know the markets, they don't know how to find the deals, they don't know any brokers, they don't know how to underwrite in different countries, they don't know the regulations and laws and rules of the real estate investments in different countries. So this firm is teaching from 0 to 100 everything, full service.
And so this firm is an American-based company that would help people from, let's say, Japan be able to operate in different countries like Singapore, you said. But then because of what was happening,
Yeah, they're a Japanese company, and then
it's
that's
a
the
Japanese.
branch in Dallas.
Got it. And what was that relationship like? Were you able to like communicate with the investors, or did you have to do all your communication through this consultation firm?
Um, it's a good mix. They have a marketing arm in Japan, so they have a consultation team in Japan, right? So those are the guys that talking to investors in Japan daily basis. Emailing them, whatever, right? Communication with them daily basis. And if they are interested in investing, deal in US, especially in Texas, that's when I come in and try to look for deals, provide the deal information and stuff like that. And then when they decided to invest, or at least they have a high interest of the deal, or decide to come here and start touring the deals and stuff like that, that's when I come in and start have a direct relationship or direct communication with the clients.
So how big was this? Because I mean, you're going to a lot of networking events, you're meeting a lot of people, you're generating this email list, but then at the same time, you just tapped into a network of Japanese, Asian investors. What was kind of the biggest impact for you? Was it were you able to raise more money from tapping into this network, or was that simply more transactional?
It's more transactional, but I was able to build network, actually a network with brokers in Texas. Of course, I was a buyer. I am a buyer. So brokers, I'm a buyer, but they know that I have 100 more investors behind me. If I don't buy the deals, I might can find the buyers. So I can leverage the brokerage business to build relationship with the brokers in Texas, and leverage that to build the relationship with all these, uh, all these guys like lenders, title companies, brokers, all these guys. So that helped me uh, doing my own deals too.
So you're networking at these networking events, and now you're networking with the brokers, different brokerages, because you have foreign investors that are looking to you to find them deals.
Right.
And then that opened up these other brokerages, passing you deals that you could say, whether you want to keep for yourself or if it would be for one of the other investors.
Yeah. So being the brokerage, doing the brokerage business is nothing additional to me because I was already doing it as a syndicator, right? I'm always looking for deals. I try to do the deals all the time. So I already have a deal information. Now I have more buyers behind me, so that I was able to get more off market deals. I was able to get the first look type of deals before they go full marketing, stuff like that. So I was able to use that as a leverage.
And how did you handle that type of relationship? Because if you're getting these deals, first come, or first sight, and now, but you've also got investors, from the Japanese consulting firm. Which ones did you choose that you get to keep, and which ones are going to be given to them?
Criteria is different, right? They are the Japanese investors back then were looking for long-term hold, yield play type of deals, already renovated. They don't want value add, and I was looking for value add. So it was a clear, distinction between us. But the broker doesn't care, right? That the listing broker doesn't care. Like deal is a deal. It's a yield or value add. So I was able to find a lot of deal informations, and then I underwrite first. And then if it doesn't work out, or if I see that this deal is fit for these clients, then I send it to them.
So
and the range, business plan, it's all different,
And so now you have these deals that are coming to you. How did you just like email your list and say, "Hey, I've got a deal. Do you want to invest?" Or what was that? How did that go when trying to raise capital?
Oh, try to raise the capital for the syndication side or the brokerage side?
For the syndication side.
Syndication side, yes. So I find the deal, and I co-GP with a couple guys, and all these guys have a database of network of investors. So collaboratively, we are able to raise 5-6 million. The deal that we get in with those guys are like first deal was $15 million deal, and the raise was like about 5 million. And I was able to raise 1 or 2 million. I can't remember exactly. Each guys raised similar amounts to hit the 5 million. So once we got under contract, we are started preparing. Well, we have maybe 3 weeks of due diligence period, right? 21 days. So of course we do physical on-site inspections, and also there are a lot of due diligence, including like a rent roll and the leasing agreements. Go through the leasing agreements, and title checks, and all that good stuff, right? But at the same time, we are preparing to announce to the investors. And as long as we finish the due diligence, at the same time, we already announced a few times to the investor that, hey, deals coming up. We're going to have webinars. We're going to introduce this type of deals. And once we finish the due diligence period, the next day, we are launching the webinar and start raising the capital.
And what was that process with with raising the capital? Do you have to do anything specific, like verifying if they're an accredited investor, or what type of structure did you do these syndications in?
I've done 2 different structures: 506C and a 506B offering. And the B offering, it's only to the investor I have the pre-existing relationship, right? So I can't really solicit to the persons I don't know, or I met the first time, right? So it's purely to the within our database, and I can take up to 35 people of sophisticated investors, meaning non-accredited investors, and that's good enough. Typically, because it's usually 60-70 people, and 35 people of sophisticated investors. That's pretty good numbers. So I don't have to go through the verification process and stuff like that. And I did the 506C offering too. That's only to the accredited investors. And I thought that's better for me because I can market it to the outside world. I can post on the social media. I can do full marketing, right? So I thought it's going to be better, but actually working against it to me because one, even they are accredited investors, they're not jump onto deals that they don't know. If I post it on the Facebook and hey, I have this fantastic deal, and who's gonna invest to me with $100,000, $200,000 right away, right? They wanna know me. They wanna build a relationship. They wanna see the track record. They understand me before they invest $100,000, $200,000. So at the end, most of the investors that invested with me is the guys that I know already, anyways. And now I have to limit myself that I can only I can only bring in the accredited investors. So it's going to limit myself to raise the capital. And top of that, I have to now verify every single investors that they are accredited. So there's a one more step for investors to do. That was pain in the ass for my investors. So I'm probably not going to do C offering again. I probably stick with the B offering.
And for those people, because it sounds like you're very, it's almost interesting because a lot of people, when they think, oh, I want to become a multifamily investor, I want to do these bigger deals, they think maybe it's just like underwriting or rehab, remodeling, but from what it sounds like you've spent a lot of time just networking, talking to people, networking with at the networking events, networking with the brokerages, networking with your existing database, your list, your people that follow you. How much of your time do you think out of investing is actually just spent on people versus the actual deal?
I focus on people because that's everything, right? Money and deal is, I think, two important things to be successful as a syndicator. Everything else is a noise, right? Everything else is something that you can outsource eventually. But money and deal, you kind of have to have it, right? And where those money and deal come from, it's networking with brokers, networking with investors. So I focus on those two things.
What was your biggest failure in real estate investing so far?
Biggest failure? Damn, I never kind of lose money. I never lose money. That's a good thing, right? First of all, um, biggest failure. Well, biggest failure, yes. So I got the 89 units in 2015, and I kind of was switching the gear, doing the brokerage too, and I was too conservative underwriting. I couldn't. I was making an offer every week, right? But I couldn't get deals for like a couple of years. So I lost that couple of years. That was my biggest failure. I was able to pick. I should pick up like 10 deals in those years, right? I wasn't doing. But at the same time, I was doing the brokerage side. I was busy on the brokerage side too, and I was doing like, I don't know, close to 70 million in asset value for the transaction side for those couple of years that I wasn't able to get my own deals. So I was still doing the deals, but it was more for transaction than syndication.
Has your database or when you're raising money, has that you're helping to do the transactional side with the consulting and the international investors, has that been kept separate from everything that you're doing for your own syndication?
Yeah, it's kind of kept separate. Main reason is the tax law. It's different in United States and Japan, and if they invest into syndication, the tax bracket goes to the stock investment, security investment than real estate. And they have to invest as a real estate because they're doing depreciation play. It's kind of like a bonus depreciation in states. They call it accelerated depreciations. So they were able to depreciate in 4 years if it's a wood structure buildings, and then in a 20 years or older wood structure buildings. So those are the deals that they were looking for. So the Class B deals in the United States is a perfect fit because it's usually built in 80s and 90s. It's been already been more than 20 years, and it's a wood structure. So that was their play. But the trick is that they have to own it under their name. so that they can write off for and offset their other income. So if they invest into my syndication deal, then they couldn't do that. But the situation have changed. Japanese government start to change the law, and they have actually changed. So they can't do that anymore as an individual. They can still do it as an entity. So my clients went down a lot because most of 90% of the investors are looking for depreciation. Now they can't take that depreciation. So now I actually start marketing myself as a syndicator in Japan and try to raise money even more than before right now.
Now that's really interesting. How do you go about raising money from Japanese or international investors?
Yeah, so two ways. I am writing book right now. I'm writing book in Japanese and try to publish within this year. So that's gonna be my kind of like a business card, right, to the Japanese investors. Try to reach more investors that way, and try to start social media in Japanese. That's one thing. And another thing is that I have few partners who used to work for institutional funds, and they are starting their own farm. I'm partnering up with those guys so that they can be equity, kind of like a co-GP. So they already have a network of all these institutional money in Japan. So we try to raise money that way. So that's the two ways I try to do. And also, I have already I already built some of the investor network doing the brokerage business. So I have those clients as well. Actually, one of the clients invested in last deal. Uh, I met through the brokerage business. He didn't buy anything, but I kept the relationship going. And I had a syndication deal in Houston not too long ago. I actually closed early this year, and he was one of the LP. He was actually large LP, came into our deal. So that's the three ways I try to develop the network in Japan.
Now, what's your reasoning for going to Japan to find these institutional investors? Because it sounds like you do a lot of networking. Would it not make more sense to find brokerages or people that deal with institutional money from foreign countries that are located in the U.S.? Like, why go to Japan to find that as opposed to utilizing the network in America?
Yeah, so I'm trying to look for blue ocean, right? Blue ocean means no competitors. Red ocean is like bunch of competitors, right? And multifamily space right now in the United States is flooded with a lot of syndication groups. So I would say it's very, very competitive, right? Just try to get into the deal is hard. Finding the equity is also getting harder and harder. So I call it's red ocean. So I try to look for my competitive edge and strength. And one of the strengths I could use is be born and raised in Japan and speak their language. So I try to tap into that. And then there's no syndication group in Japan who is actually doing deals in US. So
Wow.
yeah, so it's I can provide a unique product to the Japanese investors. They didn't have the access to those syndication deals in Japan. Now they could. If I can offer those syndication deals to Japanese investors, and nobody else is doing that. So it's I would say that's a blue ocean for me, to me, and so I can educate myself. I can educate my investors in different ways because my investors are looking for because my investors are very sophisticated and savvy and looking for like highest yield, highest IRR, right? But sometimes Japanese investors are expecting a little bit less than the investors here. So that will give me a little bit more competitive edge when it comes to the offering the deals here in the States. So there's a lot of different things I can do if I can bring more equity from Japan. Getting to the different asset classes is another one. I'm looking to. I haven't done any deals yet, but I'm looking into office space, industrial, even like retail. Retail is kind of declining markets, but still, depends on how you do it and how you, if you can be creative and say, you build like a I don't know, drive-through for the restaurant buildings. Now it's a COVID-proof in the retail building, right? There's ways to make money in the retail too, and then seems like there's a lot of deals out there because of this pandemic, right? So I'm open-minded, looking for different asset classes, even the developments, new developments, and more equity sources I have, better strengths I will have in the United States. So
I really like what you said about playing to your competitive edge and identifying that blue market, that blue ocean. Lots of people like what you said, lots of people are probably going and, dealing with brokerages that deal with international or institutional money. So you're trying to find a new way to be able to tap into that market. With that though, I mean, you're going into, is it very different, or is it structured differently if you are going to Japan to find investors for a syndication, or does it not matter because of the way that a syndication is structured, that it doesn't matter where the money is really coming from, as long as, like, how does that work?
Yeah, there's a few ways to structure. One is the typical syndication structures that I've been doing. I can still do that as long as I have a existing relationship with them, and I can raise money. Just that make sure that it's a foreign investors. I have to withhold some of the taxes. When we issue the K1, it's a different type of tax filing reports that I have to do. I can do that way, or I can structure deal in Japan. So I can set up the entity in Japan if I can raise 100% of the equity in Japan. So I don't have any money come from US, then I don't even have to follow the SEC guideline, right? Because the foreign entity buying the deals. So SEC doesn't care what kind of structure I have raising money. But on the other hand, I have to follow Japanese SEC rule doing that. So I have to follow their rule to raise money. Or third way is to set up the entity in like Singapore or Cayman Island. It's a third country. I set up the entity, raise money there. That entity buys deals here in the States, right? Still, so there's a couple ways to do it, and I'm exploring and then talking to, legal advisor. What's going to be the best way, and it depends on the deal. It's different structures. So those are the three main structures that I'm looking into do.
And last question here: what would you do differently if you had to start from scratch?
Well, okay. Start from scratch. I go direct to the multifamily. I don't waste time. I try to find a man. I'll I'll straight to the probably syndication directly, so that that's what I would do. What I would do, and I also working on the IT side. Try to get into the IT or the high tech business. You try to build some sort of software or apps related to the real estate, right? So I'm working on that right now. But I'll study a little bit more. I'll study coding probably a lot earlier age, so that I have better understanding of the technology, so that I can merge real estate and high tech, and provide better solution to the world.
So you would have studied IT tech earlier on because of what you're facing right now. What are some of the things that you're trying to resolve in the IT?
I try to we are working on making some sort of a platform so that investors can invest through online. Just click a button, they can invest, right? Type of things, kind of like a fundraise, but or the cloud street. But it's a lot more than that, right? That we are thinking doing. But if I knew the coding and if I knew that I'm getting to the high tech field, then I would study a lot earlier age. I'd probably study like I would do that like in elementary school or high school, whatever, right? Earlier is the better. Earlier is the better, right? So I would do that and then jump onto the commercial real estate.
Wow. You're a networker, you're a broker, you're a syndicator, and now you're a programmer.
Yeah, I don't like to code. I
No.
understand the basic principle, but I don't like to code. Right? I studied a little bit, so I understand enough so that I can talk to the programmers, and stuff like that. But yeah. So because and technology is the future, right? Everything is going to be is going that way, and real estate is one of the industries that's so behind on technology. So that if I jump onto the technology and then kind of like supporting the real estate industry, I think that's going to be a next big thing, So I'm just trying to work on that. Especially like this pandemic helped me doing that because no networking, no face to face. So I'm just study those things, working on those things, writing the books so that I can start market myself in Japan. I'm doing different things after pandemic. Yeah.
Great. And what's the best way if anybody wants to be able to reach out to you, Yoshi? How can they reach you?
Oh yeah, so go to my website is probably the best way to do. Lifestyle-capital.com is my website.
Awesome. And we'll include that in the show notes for this episode. But thank you so much, Yoshi, for taking the time and sharing your story. You have anything else that you'd like to share?
No, well, thank you for again, thank you for inviting me and having me on the show. It was fun, and I'd like to do again, sometime. And
definitely
face to face after everything is situated.
Yeah, I would love to be able to have you back on when I think that's really exciting for you, going into internationally for raising capital. I think that that's a space that is really untapped as far as, like you said, finding that blue ocean, because right now there's a lot of people doing the same thing. So how do you stand out? And I think you're doing something that is very different. So, thank you so much, Yoshi. And until next time, everybody, talk to you later.
Appreciate it. Thank you.
Hope you all enjoyed this episode. If you did, please go on over to iTunes and leave us a review, as that greatly supports the show. And if you'd like to be able to connect with John, the community, and I, then come and join us on our Facebook group, the Multifamily Success Network, where you can connect and make deals with other multifamily investors. Go to multifsuccess.com/community.